Director of Restaurants Equity Research at Wedbush, and he joins us now. Nick, talk to us about these numbers, and do we see any impact yet from Brian Nichols, the new CEO?
Well, I think the biggest takeaway that there has been a stabilization. There's some early signs of improvement in the U.S. business. That hopefully can get us to that sort of 370-ish, 380-ish EPS number that more or less, is what the current valuation of the share price is based on in FY26. And so, negative 8% transactions, not great. But if you look at the compares, the easing year-over-year compares, starting in FQ2, that gets you to flat to positive, comps starting in FQ2. So that's actually a little bit of an earlier, positive trend than I think where the street was. So that's really what you're seeing in the stock performance today. And hopefully we, as the quarter progresses, as the year progresses, we get, further data points that some of the investments continue to work.
Is this a company that lost its way? As we noted, the market applauded Brian Nichols' hiring. The view there, obviously, when that happens, the market is saying, we think this company needs new management.
Well, not only does it need new management, but given where the stock price is and the way the stock reacted post Brian Nichols, investors are basically saying that Starbucks is going to, recover. It is going to go back to its sort of pre-disaster, growth algorithm, annual growth algorithm of low to mid-teens EPS. So that's what the stock's already baking in. The question is, do results actually play that out over the next few quarters? I'm on the sidelines. I have a neutral rating because I still think it's too early to have an answer to that.
Hi, Nick. It's Bryden here. I'm just wondering what you've seen in the quarter with regards to the business in China. And Starbucks had been a business where a lot of growth had focused on China the last decade. It's been a key market for them. What specifically, I think, was there positive about in China, or do you feel like it's a market that Starbucks will be less focused on going forward, and really revitalizing the U.S. business is the key priority?
Revitalizing the U.S. business is the key priority. I think they're focused on essentially licensing it or franchising the China business, and I think that'll take place over the next 12 to 24 months. In the near term, the China results were a little bit better than expectations. Still down, still a negative comp, but about a point and a half better than where expectations were. Again, we're going on 3 years of negative comps now, so it's no surprise that it's getting less worse. But I'm not really sure if there are any signs that it's actually improving.
You note in your report on this dated yesterday in reaction to the earnings that marketing spending at Starbucks, marketing spending has doubled in the United States and is expected to uptick meaningfully in the current quarter, which is fiscal Q2 for Starbucks. How should investors think about that? Is that long-term a good thing, that dramatic ramp up in marketing spending?
I do think it is a good thing. Essentially, it's part of the repositioning. It's part of the reintroduction of this new Starbucks vision that Brian Nichols has to, particularly non-loyalty customers, which is really what Starbucks needs to go after. Given the, how big they are as a percentage of the category, you have to bring in new customers, right? And the non-loyalty, the frequent customer is the customer that you have to go after. And so, the marketing, the big uptick in marketing is essentially part of that strategy.
Also, Nick, just question on the outlook for sort of capital return to shareholders, or Brian Nichols' sort of philosophy or view on, is there a position that Starbucks can get to with some of their reinvestment when it starts to roll off, that there's the opportunity to start doing share buybacks or a return of capital to shareholders? Or is there more than enough capital being consumed in the reinvestment in the business Has Brian spoke about that at all, or what would be your expectations, for the balance of this year?
Well, certainly for the balance of this year, I don't expect share buybacks. I do think there's a lot of reinvestment in the business, a lot of capex that needs to take place. That's going to preclude share buybacks. I do think by the second half of FY26, should this game plan play out and Starbucks is put back on this sort of normal growth track, I do think that second half of fiscal 26 is probably the most realistic timeline for share buybacks. I do think share buybacks will take place again, but probably not in the next 4 to 6 quarters.
Okay, you've got a neutral rating on the stock and a price target of $100 per share. That's basically exactly where the stock is right now. What would it take for you to move to buy on this stock?
Well, one of two things or both, right? So number one, if there's some evidence pointing to an even higher EPS trend line or profitability/margin trend line in an FY26 or FY27 than what I'm currently expecting, and or some structural changes around, for example, the refranchising of China, if there's a big buyback that comes with it, or something exogenous like that.
Nick, thank you so much for spending some time with us. That's Nick Setyan, Managing Director of Restaurants Equity Research at Wedbush. He has a neutral rating on